And the real carrot at the end of an opportunity zone is the sale 10 years after you invest in the property, because the sale is tax free. In essence, it's very similar to a Roth IRA. If the opportunity zone was a huge opportunity, but of course it was limited, it was going to stop. And in 2026, everything was going to end. And
welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level, and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everyone, welcome to the Real Estate Pro Show. I'm your host, Erika, and today I'm thrilled to be joined by Andy Lee, a powerhouse in real estate and tax planning. Andrew, thanks for being here.
thank you, Erika. I appreciate you having me on the program.
So let's dive on in, Andy. For folks who may not know about your world, give us a little bit of a rundown. How did you get started in real estate?
Boy, that's a story that took a while. I'm 64 years old, so I've been around the block a couple times in this life, and started basically in the hospitality industry for about 20 years, and found a buddy of mine who said, "Hey, you need to kind of get a real career, so why don't you get into real estate?" So did the real estate thing, but having that hospitality background, I started getting into the commercial angle of it, and helping people put together restaurants and bars and hotels and that kind of thing. And it was a great start. I worked for a company called Centers Business Management. I don't even know if they're still in business. This was back in 1993, but it was a great experience for me, kind of getting into the industry. So from there, I had decided that we needed to raise money for some of these programs and projects. And that's when I decided to get securities licensed in 1995, and basically have combined my real estate and securities along with the tax planning angle of what real estate offers. That's why a lot of people invest in real estate, right? I mean, you get these tax benefits, you get to depreciate your property, you get to do 1031 exchanges once your property grows out. So that was just kind of a natural fit for me. And here we are 30 years later.
Yeah, that's awesome, Andy. Was there a particular moment that you realized that you wanted to get into tax planning?
I think that eh, what I like is, I've always said, pay unto Caesar what's due Caesar, but most people pay a lot more. And a lot of times, people that are in that middle to upper middle income range, they don't have um, the information or the wherewithal or the economic viability to figure out how to utilize the tax codes in a way that are beneficial to people. And whether you believe in tax benefits for certain things or not, in essence, the tax benefits are there because the government stinks at doing a lot of stuff. So if you're able to do that on the personal level and do it more efficiently than the government tends to give you these different tax benefits, whether it's giving to charities or building housing or something along those lines. So I just felt that it was
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
important, especially for those people in that middle to upper middle income range that really needed help kind of getting a leg up, to keep $100 or $200 or $300,000 in their pocket on a transaction that they wouldn't normally even consider. That can build a great benefit for their children down the line to help build their estate. Shoot, at 5% cash flow and a 5% compounded interest rate, $300,000 grows to $1 million in 19 years. So I think it was more of my thinking for my clients, my existing friends and network of people that I was working with, to really dive into the tax planning angle of real estate. It's a niche. Now, I'm not a CPA, for full disclosure. I'm not an enrolled agent. I'm not a legal, I don't have a law license or anything. I'm securities licensed and real estate licensed and insurance licensed, and I have a driver's license. But I think the idea behind the tax planning is different than tax preparation. So we do train CPAs, we train real estate agents and all sorts of things on these different ideas and strategies on how to maximize the tax code. Most people in the real estate industry know what a 1031 is, but we're going to look at about 5 or 6 other tax codes to see how it might massage into a transaction, as opposed to just doing a flat 1031 exchange. 80% of the time, okay, we're going to do a 1031 exchange. But I think it's important to at least analyze the other options out there, because everybody's situation is different, and the needs and wants of your clients are really important to take care of. And you can do that much better when you have different avenues to take them down that path. It's not all down one straight shot on the highway. Some people want to take the scenic route.
Got it. Got it. One thing that we were talking about earlier before we started recording were qualified opportunity zones. And my understanding is there aren't a lot of advisors that deal with that. Can you talk more about that? And how does that influence the industry, having the opportunity zones?
The Qualified Opportunity Zone came out with the Tax Cuts and Jobs Act in 2017. I just happened to stumble into a gentleman who was kind of a guru at the first Qualified Opportunity Zone workshop in Los Angeles. And it really kind of caught my eye. Nobody knew what it was all about when it first came out in 2018. In fact, I think the government had 5 pages on real estate opportunity zones and 5 pages on business opportunity zones. So it took a long time to get any kind of traction. I felt that, as far as, again, a tax planning strategy, the opportunity zone was a huge opportunity, but of course it was limited. It was going to stop, and in 2026 everything was going to end. And when you started to really look into it, the end and the real carrot at the end of an opportunity zone is the sale 10 years after you invest in the property, because the sale is tax free. In essence, it's very similar to a Roth IRA. If anybody is familiar with the differences between an IRA, which grows tax deferred and then you pay tax on it when you take it out, or a Roth IRA, where you put, after tax money into it, it grows, and then you sell it tax free. And I think that it's having a much bigger impact now with the big, beautiful bill that just came out.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
We're putting together some workshops on that and how those will affect your real estate clients. But the qualified opportunity zone that we have existing now, the actual zones will end in 2028. So for us as real estate and investment professionals, we're talking to people who own properties in opportunity zones now. Not that all of them will change, but there will be a change. They're going to change some of these zones. Part of the reason that the opportunity zone is such a great program, not only from a tax side, but to be able to help society, is these zones are especially geared towards economically depressed areas. So what's happened over 10 years or so, those zones have been around for about 8 or 9, we've really developed a lot of areas that are no longer economically depressed. So they're going to be changing these zones going forward. So I think as a real estate professional, it would, behoove anybody to find out where the real estate opportunity zones are, in your local area or neighborhood, and maybe talk to some of these real estate owners, and a lot of them, they may not be considering getting rid of the property because they want to die with a property so their kids get a step up in basis. But I think there's a whole bunch of opportunity there from a real estate side. I think as far as where we're at now, we're at about 120 billion is the estimated amount that's been invested in the zone since 2018. And they've built somewhere between 500 and 750,000 homes because of it. So it's been a really big boon. And now that it's permanent with the new law going forward, I think you're going to see a lot more money coming into it. And it's just going to be a big benefit for not only the clients, but the communities and the investors that are investing in these types of properties.
Your experience with all of this is so fascinating. And maybe you want to get a little bit broader with this next question, Andy, but what's one critical factor investors often overlook when they're evaluating a property?
Well, we had talked earlier about the 6 Ds, which I call due diligence, due diligence, due diligence, and I think that a lot of times, from a client perspective, it's the desire to have the property that can tend to over stimulate the decision, if you will, to purchase a property. Uh, the key, I think, for me, especially looking at a builder, making sure that the builder has a good reputation. For example, we bought a house that was built in 2001. Just last week, we had to tear out a retaining wall that was failing, and found some stuff underneath the foundation that we have to fix. And my wife really wanted the house quite a few years ago, and we thought, okay, this is a great place to have. And we did find out that the builder had a reputation that wasn't exactly the best that's out there. So I think that the due diligence on the properties that you're purchasing is key. Now, if you're looking at something that might be more of a syndicated deal, where there may be more than one investor, you're going to want to take a look at the sponsor. You're going to want to know who's involved as far as raising the money and putting the project together. You're going to want to know who the builder is and do due diligence on them. There are third-party firms that are out there that do this for people all the time. We have 3 or 4 that we work with, and we have a pretty conservative approach to things. So
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Somebody coming up and saying, hey, we'll get you a 20% IRR over the next 5 years and that kind of thing. That probably isn't going to be something we put on the platform, because usually there's a lot of high risk. If there's a massive, return, there's probably a lot of risk involved. So I think mitigating the risk in your investment through your due diligence is key, because here we are, in an age where pretty much anybody can buy a property. I mean, you look at 2005, 6, and 7, if you could fog a mirror, you could get a loan. And that's what blew up the industry back in 2008. It was funny. I used to have a little TV show down in the Bay Area years ago when Greenspan was still in office. It's called Money Concepts, the M&Ms of money, because you can make money and your money can make money, but you'll never make as much money as your money can make. And we were scolding Greenspan, knowing full well. And, if you saw The Big Short, it wasn't like that guy was more brilliant than a lot of people in the industry. We knew this thing was going to blow up, especially as interest rates keep rising. And I think that's another thing that investors can make a mistake on also, is not understanding how interest rates are going to affect the investment that you have, whether it's your personal residence or whether you're buying an investment property. Because if you have a variable rate loan and you can buy into an interest rate, and you're able to afford maybe that interest rate or maybe a 0.5% higher, if it's got a 2% adjustable annual adjustment on it and interest rates are going up, you're going to be in trouble. So the lending side's important. I think the due diligence side is extremely important. And then, kind of understanding the geographics and demographics of where you're at. That's so important. And it always changes, right? I mean, everything changes. I go back to my hometown in Iowa where I grew up, and I barely recognize the town. And it does have geographic and demographic changes. So I would say probably, again, kind of coming back full circle, due diligence is key. Find somebody that you know and that you trust that can kind of have a second set of eyes to look at the property, and then, look at the developer, and then take a look at how you're going to finance the property if you are. Leverage is great, by the way. It's a great tool, unless you ask Dave Ramsey, but it can be a great tool depending on. I mean, I locked in at 2.6 on my mortgage, and I tell you what, to me, that's practically free money. I can get more than that in certain money markets right now. So, and understanding how to use leverage is key.
Yeah. Yeah, totally. Andy, I want to pivot a little here because I know you've done quite a variety of things as far as real estate goes. Every pro has a story where things got tough. Maybe a deal went sideways or you had to pivot, whether it was for yourself or for a client. Do you have a moment like that you can share on your journey?
Yeah, well, we've had quite a few escrows fall out. I know, a lot of people have high hopes that hey, we're in escrow. All right, we're going to get paid on this deal as an agent, and we're going to make sure this thing happens. We did have a deal that recently, it was in a 2.5-year escrow, and we were working with the clients, and it was basically in an opportunity zone. It was an opportunity zone project. and a hotel company was going to come in and build a hotel. They were trying to do a bunch more due diligence on it, and another hotel got built across the street. This was in Kentucky, and then there was another one that was built just down the street. So about 2 weeks before escrow was supposed to close, they decided to back out of the program. So I'm sitting here going, oh my gosh, we had done our due diligence on the firm. I mean, they had plenty of money. It wasn't like they couldn't afford it. I think they had just started looking at the geographic or the demographics of it and seeing that these other two hotels went up, and now they were going to have some competition because they waited too long. So of course, the client calls us and goes, oh my gosh, what are we going to do? We've been in escrow for 2.5 years. We need to figure out how to get this done. And I think this just bodes well to having a network around the country of people you deal with. Of course, I've been in the business for 30 years. So, and as you can tell, I talk a lot. So I just talk to everybody, and you have this symbiosity with people, whether they're in real estate or lending or even something as far as media goes. So we were able to find through our network of professionals and sponsors another company that is a sponsor. They buy properties all over the place, and bring them in to look at the property in the opportunity zone, to create an opportunity zone fund, to put this project together. And basically, they're doing a luxury high rise. Part of it's a hotel, and the top are condos, that they will sell, and that kind of a thing. And it was kind of neat because I had come in as a referral from another advisor. The real estate agent and the other real estate agents were working together. I was just coming in to help them put the tax plan together. And then I actually ended up coming in on the fee simple real estate side. And it wasn't a huge deal, but it was, it definitely had some zeros behind it. And we were able to come in and help them find another buyer and another sponsor. Plus, we're able to help on the qualified opportunity zone with that project. So it's been a really neat life that I like to say that I created. God created it for me, of course. But to have these resources available and continually vet them. I mean, we want to make sure that we have quality people that we're working with, and to be able to have the avenues to help people out in certain situations. Had it been 2 or 3 or 4 years after I got in the business, I would have had not figured out any kind of way to find another buyer for that property in Kentucky. I'm in Idaho. How would I have done that? So I think as far as that going sideways and then keeping the client happy and actually being able to become more involved in the transaction was a happy story to a sideways transaction. And I don't know if that answered your question or not, but that's what popped into my head when you said that.
Yeah, that was a great answer and example. And the funny thing is it actually really transitions in the what I wanted to talk about next, because really you couldn't have done that without building trust with your client and
Exactly.
in building relationships with other partners. So what I was going to ask and still am is, how have you found this is more advice for people who are new in the industry. How do you build those impactful relationships? How do you build trust when you're new?
I think for me, after years of doing this, I think the key is managing your activities and being at activities. Going out and trying to find prospects is the pain in the keister. It just is. Nobody likes getting on the phone and smiling and dialing. I mean, that was my first job, right? Here's a phone book, start going down this city and start calling people. I hated it. I hated it with a passion. So I had figured that if I start working with other spheres of influence and even start doing certain things for them that may not be what I would like to do, but to work with a CPA on something, to maybe help find clients, or work with, of course, other real estate brokers or lenders. I've found that going out and being amongst the people in the industry, you're going to learn so much more. We we have a kind of a family owned program with our security side who we work with, and it's all about a culture of sharing. And it I think the real estate industry, in its essence, it's usually pretty good people that want to help others out, but go to the industry activities. I was at 37 trips last year. Now, of course, a lot of those were due diligence trips for buildings in other parts of the country, but some of them are just big organizations where there's 2,000 securities and real estate people, and you just go in and you talk to people. Next thing you know, it is really a small group. You'd think it's a large group, but the people who are really into it and very successful pretty much know each other. I mean, I got a unique niche. There's probably 50 to 100 people that do what I do. There might be several thousand that do something similar to that. But these 5 or 6 or 7 different organizations that I've connected myself with, and it costs a lot of money to go to these things. I mean, I used to do it on the cheap and, buy a van and sleep in the van and then, take a shower at the health club and run in and, pretend like I was paying $600 a night for a room. But I was there and I was shaking hands and I was talking to people and please tell me how you do this. This is weird. 1031 exchange. I've always done it this way. How can you do it this way? And you just talk to people and ask questions. And that builds confidence. And you can't really gain trust, in my opinion, with anybody if you don't have the confidence behind what you're talking about. That foundation is based on truth and reality. Your life is about truth and reality, because if you have truth and reality in your life, you have something to stand on. And when you're talking to a client, you don't have to let them know you know absolutely nothing about a 1031 exchange. I tell my network partners all the time, I said, in fact, if you're in over your head, that's a good thing. Build yourself a network of professionals and say, I've got a solution to that. I don't have to learn it, but I've got a solution to that. And if you're licensed and they're licensed, just take the referral fee. Make sure the client's taken care of, because once you get 2, 4, 10, 15, 100, 250 clients that are happy because you found the niche that they needed, which is outside your expertise, you're the quarterback, right? You've got the team. So I would say build a team of experts and that are good. Vet them, do your due diligence, just like you would on your properties, and that's what I have. I mean, I get people who ask me about estate planning all the time. I got one of the best estate planning guys out in Kentucky. I just send them to him, and I know the client's going to be taken care of. So I don't know if that answers your question, but I think as a new person, going to events, shaking hands, asking questions, and learning to build your confidence, to build trust. Because again, the only way you're going to build trust with the client is talking from your own truth and knowledge and intellect, and you build that through your resource network.
Yeah. Yeah. Andy, this has been awesome. Your information today has been very insightful. I know we have a lot of people who are looking to be more smart with their investing. So thank you for dropping all your knowledge today.
No, I appreciate it. It was fun to chat with you, Erika.
Yeah. Yeah. If someone wants to connect with you and reach out, what's the best way for them to do that, Andy?
Probably through the website. It's taxwise1031.com. It's all our information is on there. and I think that way, if you, Andy at TaxWise USA is actually my email address if you want to do that. I mean, you can get my phone number and everything from the website, but that's probably the easiest thing to remember. Be tax-wise with your 1031 exchange, because 1031 exchange isn't always the best answer. When do you not want to do a 1031 exchange and do something else? So I think that tax-wise angle, kind of why we came up with that name was to take a look at these different codes and mix and match them so we can maximize what the client wants to do with their transaction.
Yeah, that's fantastic, Andy. Thanks again for being on the show.
Sure. Thank you. Have a great day.
Yeah, you too. If you got value from this episode, make sure that you're subscribed to the Real Estate Pro Show. We've got more conversations coming up with pros like Andrew who are out there building incredible businesses in the real estate industry. We'll see you on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.